All right. Thanks for your patience, guys. Evening podcast for September 12th, 2022. Tortoise Capital. Start with the market 150. We're looking back 150 days here. These are 30-day chunks. The closest in 30-day chunk is this one. Here's the 10, 20, and 30-day look backs. This one is the 5-day. And then this was today's 1-day range. So you can see that we're right in about the midpoint of the 150-day look back. That's a good thing. It looks like we've established a Kata 2 formation here. It held support where it needed to above this support level. And it's turned in a pretty nice move these last 3 days. And today it broke through the PSAR decisively. It's well north of the dragon. You'll notice that the 5-day range is large compared to the 10-day. The 5-day range is the 10-day range, so that's quite a recovery. That's the first leg off the bottom. The second leg, same size, would get us to the peak of the dragon hump and the hump of the RL10, and then north of 430 is where you can really hit the gas pedal if it can clear that support level. And then it's kind of back to business as usual. So we got 50% of the retracement established. Now, what's that mean? That means that is a significant move off of that low that short-term traders are going to be wanting to preserve, which means that I would expect there to be sharp selling. If this can't break out to highs but starts to sell off, then everybody who made money in those last 3 days is going to want to start putting their stops in to preserve some of those gains. So we could see an accelerated sell to the downside just as easily as we saw this accelerated buying off of the bottom. So it's important to remember in bearish normal conditions, you get both of those kinds of violent moves quick, fast, and in a hurry. So let's not lose sight of that enthusiasm. In our enthusiasm, I should say. If we zoom in and just look at the 30-day look back now, also on daily charts, we can see that even more clearly. We've had really 4 days of nice recovery. You had the sell-off that terminated in this bottoming out, and then you had an uptick in the MACD. So this gave us right here a WMB3 style entry. And then this one gave us a 123 style entry. And then this one gives us the crossing of the dragon entry. And then this one gives us the PSAR flip entry. And then today, officially, the RL10 touches the PSAR. So tomorrow, that PSAR will flip to here, and then that PSAR will start printing like this for as long as this continues to go up. And this really illustrates why we might be interested in these earlier entries as the market slowly improves. The important information was that it had failed to fail further. And so while on the daily we're waiting for confirmation, it turns out that on the 30-minute and the hourly bars, there were some recognized patterns where you could start getting that intraday position built until such time as the daily chart kicks in and adds more reinforcement to it. So you can actually start building those positions when you identify key price reversal levels, which is geared with the reversal of the RL10, the crossing of the baby dragon. Now notice that the dragon is starting to slope up, and we're getting very close to an owl entry here. As soon as we take out this peak, that's going to be an owl. So that's the argument for some of these earlier entries with less confidence on the daily, but the intraday charts actually look pretty good. We've gone from oversold from here to here. This is all oversold on percent R, and now we're climbing out of that hole, and now we're becoming overbought. and the MACD is about ready to go from below the line to above the line, where it gets into summer. So all things bright and beautiful. On the 30-day look back, you can see my earlier point, and that is that on the 30-minute chart, you get a really nicely defined triple bottom here. You see that there was some urge to buy already, so you're not surprised when this comes up. Now, the important point on this one is that hesitation level hits right at the peak of the dragon, so that is resistance until it proves that it's going. So this is the one that takes out the peak of the dragon. This is the price that takes out the peak of the RL10. So now this becomes an emerging dragon style of an entry. That means all of this stuff in here we would call the pocket, because what you're doing is you're buying inside this range that's between the peak and the belly of the RL10s. Hasn't fully broken out yet, but what you're doing is that failure to fail sets up a little piece of quietude in here where you start getting these improvements, and you can get a PSAR flip on the 30 and start buying those up to the point where it tests resistance. Then if it starts to fail like it did, you can still cash some winning trades and hit some re-entries in here. And that's just looking at the 30-minute chart. If we went down to the 10 and the 3, you actually get some good intraday trades as well. But it's important to see how the 30-minute chart, sitting in the middle like it does, in between the 3-minute or 1 minute for pure day trading, and maybe the daily chart for longer term swing trading and so forth. So anywhere from 30 minutes to 2 hours gives us this mid-range that's either very slow day trading or very fast swing trading. And that's why we include it in here, because you can really see the support and resistance levels broken out. And this looks back at the 5-day and the 10-day chunks. Okay, 5-day and 10-day look back periods. And that gives you enough work. Now, we've got some significant resistance above. So if it can break above 417 and keep going, then the next price level that is resistance is 430. So we're getting very close to a couple interesting tests here at 413 and at 417, which if it can get through, it's off to the races. And it will have clearly left behind all of this pain and suffering. Okay? Take a look at sector performance now. Starting with the indexes. As always, we start with our baseline, the S&P. It was up 1.07%. That's a healthy move. It was better than the diamonds, which were still pretty good at 0.7. And here's the cut line between absolute winners and losers. Only treasuries were in the negative for our big indexes today, minus 0.82, down to 107.42, and that's just a rotation back into stocks. Slightly better than the market were tech and the Russell at 1.2, so marginally better than the S&P. Single best performer was emerging markets at 1.49. God, I drew that like a drunkard. Sorry. Emerging markets 1.49. Tesla 1.58, so that's really leading the way north. Now, something I want to show you in tech. Now, we said to watch tech because it had been lagging last week while the market was going up. We said this thing could really have legs if tech suddenly went from being a laggard back to a leader, and that's kind of what it started to do today. But I want to show you the difference between the NASDAQ tech at 1.2 and the S&P tech, which is larger, more mature companies, at 1.6. That's like your Microsofts and Apples, and that really dominated today. So old school tech is easier to buy for risk managers because it's not as volatile. You have some earnings and whatnot that you can leverage. So that actually bodes well for continued strength this whole week. Tech is back in the leadership, and it is conservative tech that is leading the way. Check or hold. All right, so let's look at the underperformers today. So here's the S&P, and we'll look at the sectors first. There's materials, real estate, finance, and biotech from 0.76 and 0.8, up to about 1%. Here's agriculture, 0.68. It's comfortably above 20 bucks, getting ready to break 21. That's a good thing. Aussie dollar, 0.6. Staples, 0.4. So when the growth is winning and the staples are lagging a little bit, that's money rotating from the defensive plays into the growth plays. That's what you would expect in a market that's becoming cautiously bullish. Lithium was at the cut line between wins and losses, 0.06. Underperforming continues, uranium 0.7, Ethereum and VIX -1 and -1.7. Excuse me. Marijuana down 4%. And now the metals all underperforming. So we had U.S. Steel was worst at -5%. Cliff Steel 3.74. Alcoa 0.53. So all of the metals are in a cyclic sell-off. So last week they were all leading the way, and now all the metals are starting to fail. Texas Instruments in the chip space is basically flat. Intel 0.32, NVIDIA 0.82. So the semis that we're tracking, NVIDIA, Intel, and Texas Instruments, all underperformed NASDAQ Tech and S&P Tech. So as a sector, there may be some like value plays or catch-up plays in there, is what we're looking for. Okay. Finally, let's see, Microsoft underperformed 0.83, and then we're back to the S&P here. All right, let's take a look at outperformance today. Again, the S&P. So we have clean energy, consumer discretionary, blended commodities, oil exploration, commercial real estate, and the FANGs. So between 1.49 and 1.23, all better than the S&P's 1.1. Okay. So we got lumber and the other lumber at 1.85 and 1.56. That's good. You got tech, oil, energy, precious metals at 2%. Brazil, ARC Genomics, Mexico, ARC Innovation in a nice cluster of from 2.1 to 2.4, all strong outperformers. Bitcoin, best performer at 5.16. So now the individual companies. We got Devon Energy. So that's good. When you see the energy sector and oil are strong, but then it's not a surprise when Devon Energy leads the way. So that's the tell. When you got the market is up and the energy complex is up better, and then Devon Energy is the best company, that's the one I want to hit. So there's people buying Devon, but I'm also getting a boost from energy in the market, all of which contributes to Devon Energy. That's hybrid trading, that is market sector target trading, that's core and turbo, that's using the logic chain, that's all the pieces and parts that we use. Individual companies that did well continued. Robinhood, Apple, Rivian, Coinbase, PayPal, Simon Property Group. So some of your financial disruptors in the energy sector. So I will be looking for more continuation tomorrow for energy and tech. If it's energy, I'm looking for Devon to continue to lead the way. That'll be a good thing. All right. Daily reports now. Sniper trade of the day was Devon Energy. Not a surprise. Here was yesterday's close. Here was a nice big gap up. Here was the opening range 3, OR3. And the second bar started taking that out, so I buy it with a standard risk box. It immediately fails 2 bars later for a -1. It then recovers, gives me it never got through the dragon or tempted the PSAR. The gap was too strong. So when it reversed, when this sell-off reversed, I get a 1, 2, 3 entry right here. Standard work. Standard risk box. I considered a second position here with the R10 wiggle. Didn't. And then took the standard PSAR exit here. So if that's 1 unit of risk, that's about 1, 2, plus 3, and -1. So we're net +2 so far. I get a COTA 2 right here. And standard PSAR flip, standard risk box, standard scratch. I get the same trade a little bit later. PSAR flip, standard risk, gets about 0.5, and now it feels like it's done, and in fact the whole rest of the day it stays tight in this trading range. So tomorrow I'm looking for continued strength in XLE or a sell-off, in which case this move up becomes vulnerable. I'm a little discouraged that there wasn't more buying pressure, so I will be mindful that may have been just a one-day move that was worth about 3.5R intraday for Devon Energy. Check or hold, sniper trade of the day, absolutely standard work. The traders did real well today. Proud of their work. Here's Tim. He was not available to start trading here, which is, sadly. He had taken the kids to school, so he wasn't at the desk, and so he wasn't aware that there was economic information, and then this was a breakout from the 10-day high. So when that 10-day look-back period breaks, it's not unusual to see that kind of a move. So that's why you want to know where that 10-day high is, and you might think about breakout orders in there. But he gets on board, and he's able to buy the continuation, gets paid a fraction, but that's better than nothing. He gets short and gets paid, tries a re-entry short, it doesn't work, takes a micro loss, stop and reverse, gets paid, gets the PSAR flip, crushes. I know you're off desk, but this is the natural place to, when it's had 2 chances to break down here and here, and it doesn't, then this breakout becomes very interesting. And then when you get that kind of explosive run out, when you get that kind of a 1-2 peak and then starts to fail, just cut it. He plays the PSAR flip, gets paid, quick loss and a quick paid, and nets out for almost 3R for the day. Very well done. And that's not even getting the biggest moves of the day. This is the one right here where I would consider a second position because you have cleared the collapsing dragon and you've got plenty of money in hand and it's starting to collapse further. That's an area where we might have added and picked up another 2R on that one. If you get that second position, then this is enough of a reversal here to the edge of the dragon that you would take this exit rather than letting it come all the way back through the VWAP to the PSAR. Now it didn't, but you don't know that. So taking a 1-2 exit would be plenty good. So that's in the euro dollar futures pair. Okay, really nice work, Tim. Here he is with an additional 2.8 on the S&P E-mini. Here's a fake 1, holds support at the VWAP, goes 2, he gets paid. Re-entry, gets paid. Re-entry, smashes it for goodness. Short for greatness. And then long for goodness. 2.8, so 5.7 for the day. Ladies and gentlemen of the jury, we rest our case. Here is Shahab, one of the super traders from VTI, making an appearance. He's doing Apple on the 3-minute. Here's the 3-minute. There's the OR3. He buys the breakout standard risk box. There's a P1 rollover and then the PSAR flip for 1.25. He's got a commitment to the long side. Here's the next PSAR flip. He's in. He gets paid. This is a COTA 2. He's in on the PSAR flip, gets paid. It doesn't fail. It resumes, so he gets back in. 0.53, total 3 for the day. In Apple, for crying out loud. What do you think about that? Here's Woj and Devon and Tesla getting what is available. He got the same sell-off in Devon that I did. I didn't go short on that one because energy was strong at the time and it still had not, it was still above the gap. So I waited for this one, and then we got the same trade and he crushes it, and then gets the same couple pieces for about a full R. Tesla, he nails on the early breakout from OR3, gets paid. I think you waited too long on that one. I'd like to see on this run out, I'd like to see you get out before that spike or at the edge of the dragon. Either of those is preferable to this. Then here's your PSAR flip. You could be short when it crosses the VWAP. But still good scratch, good scratch, good scratch, good long. 1.2 plus 8, that's plus 2 out of his standard pair. Nice work. He gives back a little on the Aussie. There was a lot of chop in this one. Once again, we got to stop being away from the computer. You need to let us know when you're going to be away from the computer so that we can be ready for these breakdowns. And in the second position, and then the PSAR flip needs to be here instead of here, because that makes this one at least a scratch. But really, you should be getting out at a 1, 2, 3 like right there. And then the re-entries at the PSAR flip here instead of up here, which makes this a much better trade. And now we're giving back way too much. We let that come through the dragon, through the PSAR, and managed only to keep a no-lose plus dinner for 2. So we got to be much more grateful for the gifts that we are given. This entry here is late. I think the PSAR flip is here. If you're going to get short, it should have been here. You probably would have taken the loss there. This PSAR flip entry should be here, but that's still pretty good. I think we're giving back too much. You gave back 2/3 of the move and only kept 1/3 of the move. This is a good short. We got to be able to scratch that instead of giving back 0.4. This is a better. It didn't follow through, so better to get out. This one is late to get in, so we got to get out sooner. The re-entry is here. That would get paid. And nice work on that one. So I think there was some sloppitude inside here, to be honest. And that 1.7 eats up some of those previous profits, but we're still net positive for the day, and it's all about learning. Got to tighten up the ship on that one, though. Too many leaks. Luke with the Aussie dollar, the 5-minute Aussie, comes back with a vengeance. He was not feeling good, so maybe that's what we need. We need to know when he's sick and mean, because he was relentless on this one. Quick loss, scratch, quick loss, big pay that pays for all of that. Scratch, crush for 8. And then if you add those two, that's more like 14. I don't mind you not getting this one because we haven't really cleared this resistance level yet. But this one, I think we got to nail that, because all of this has been negated and it is going. And I'm looking for your additional support lines in here, and that might have told us that maybe this was a breakout from one of those regions. But that's a pretty good exit right there. Good shooting, Tex. Let's see. I think that's everything. Trading reports. Sniper. Yeah, that's everything. All right, I'll get this published and posted, and got a date with the hot tub here to recover from soccer practice. The kids beat me up pretty good today. All right, that's everything we got. We'll get this published and posted. See you tomorrow. Ready to rock. I think tomorrow this thing is, be ready for a rocket sled up tomorrow. 4 days in a row, and it's early in the month, and tech is back in charge. And it was old school tech, not young school tech. So there's some catch up that people need to get on board. So I would not be surprised by a big, strong one-day move up, one more. So be ready for that. Take good care. We'll see you tomorrow.